Welcome to the Market Review, where we bring you key developments in the financial and capital market as it affects the economy. Today, our concern will be around the trends and developments that will shape the fixed income market in 2022. And with me to have this conversation is Mr. Oladipo Ajayi. He's the head of the fixed income desk for Chapel Hill, Denham. Nice to have you on the show, and good morning. Thank you very much. And before we begin this conversation, let us give you a recap of some key activities or stories that came up from the capital market from last week. First was that the Nigeria Exchange Limited and the Lagos State government have pledged to collaborate more in the areas of leveraging the market to finance infrastructure projects. This was part of the conversation between the governor of Lagos State, Mr. Babajide Sanwo-Olu, and the CEO of Nigeria Exchange Limited, Mr. Temi Popola, when the NGX board visited the governor. Also last week, the FMDQ Securities Exchange admitted the Nova Merchant Bank 50 billion naira commercial paper on its platform. This is part of the plan to continue to drive activities in the commercial paper space in the year. Also, the Lagos Commodities and Futures Exchange announced that it has listed 39 daily member firms as part of its expansion plan in the commodities market ecosystem. We take a break, and when we return, we'll continue the conversation. Welcome back. If you're joining us, the conversation today is the Market Review program, and we are looking at trends and developments that will shape the Nigeria fixed income market in 2022. My guest is Mr. Oladipo Ajayi. He is the head fixed income desk of Chapel Hill, Denham. Mr. Oladipo, let's first look at the FGN Bonds already that has, we've had the January version already that's come out, and of course the Euro bonds activities. How will you assess the performance so far in 2022?
Thank you very much. Coming into this year, we are well assured, we are well aware that there's going to be a lot of liquidity in the month of January because, if you look at FGN market bond, we understand that 2022 bond maturity, the flow will be coming into the markets. And so also, we also expected close to about 220 million worth of bond payments. So in total, we are market was expecting about 850 million into the system in the month of January. So as a result of that, we know that that will somehow spoil a lot of activity, and that is exactly what we saw in the month of January. We saw a lot of portfolio managers coming to the market to actually pick instruments according to their own investment spectrum. And so we also saw that a lot of PFAs were very active in the market in that period. And I think one other thing that actually fueled the activity and the demand that we saw was that the dovish stance of the MPC at the last MPC meeting. And of course, the whole market was already expecting that, considering that there have been all guidance from defense, that there will likely be also tone change on the part of the MPC. But rather than that, we noticed that they maintained their pro-growth status. And as a result of that, that's also further pushing the effect of the demand we saw in January. However, on the flip side, in the Euro market, contrary is the case, knowing fully well that Fed already moving from more dovish stance to a more of a hawkish stance. As a result of that, we saw activity changed in the European market. A lot of the traders, portfolio managers are currently trying to restructure their portfolio in anticipation of that day when the Fed will start doing something. And also doing really well that the asset buyback of Fed also has actually commenced aggressively. So in summary, everything actually impacted the Euro market negatively. And we saw yield actually climbing up, and but in the local market, we saw yield actually going south.
So, of course, the signaling from the Fed impacting the Eurobond, while, of course, we're seeing some interesting traction in the FGN bond space. Yeah, but just like we read in the recap from last week, the commercial paper space is really getting a lot of activities. We've seen Nova, 50 billion commercial paper. We've seen several others, even Providence Bank. Several others are coming on board. Is that rally going to persist this year? Are we going to see increasing activities from the private sector players? Because traditionally we've been having these issues of crowding out of the market by the government.
We have seen quite a number of commercial paper issues this year. Stanbic has been in the market, Denham has been in the market, Coalition has been in the market. And also, the last but not the least is Nova that is currently just closed yesterday. So we feel that this will actually continue. And sincerely speaking, there's no better time for you to go to market than now, because we think that the lifeline will be short span by the end of Q1. The lifeline for the CBN or for the MPC to continue to be published, we feel that will be short span by the end of Q1. When we start seeing the full impact of the decision of Fed on the marginal frontier market. So we think that as that particular point in time, to come to the market to issue will actually raise will actually go up. And as a result of that means that people that are holding data will likely actually have to raise funds at a higher rate. And also another hindrance to markets, to issuance in the markets. Currently, the FIRS circular that came out and also listed commercial paper as part of the instrument that will be affected by both holding tax and also company income tax. A very smart investor would have advising that into rates, and because you have to first of all net all those tax from expected return before comparing instrument appropriately. So I think that will also further impact the rate at which issuers will actually be able to actually raise money in the market going forward. So I think that there's a short window that's still available from now till the end of March, when anybody to be very much aggressive to raise a short-term fund that can span through the year. So, but can people still come to the market later in the year? Of course they can, but just that time we as a cost.
Okay, so there's a window. So to all key private sector players listening, there's a window for you to really leverage this commercial paper market space. That's by Q1. And on the other hand, you know, the government is aggressively looking for revenue. So now the FIRS is now looking at that area to also tax net. So again, you have to make those considerations. But all the same, it's interesting to see that the commercial paper market is picking up. It's something that we've been, advocates like you and others have been talking about. But again, there's that window before we see the Central Bank of Nigeria respond to what will be the impact, which leads us to the next conversation. You've talked a bit about it, the US Fed. I mean, the whole global markets have been rallying and getting ready to see that face of what the US Fed, and most likely from next month, we may begin to see those rate hikes. And people like Goldman Sachs have projected that maybe 2 or 3 times this year that we'll see that Fed hike. But how will it impact Nigeria's market, the fixed income market in specifics? Maybe 2-3 ways it will impact when that starts.
Okay. For US Fed, I'm very, very sure that we start seeing their aggressive move from March. And please, my views premise on the inflation figure that was released.
Over 7%. 7.5. 7.5. That's the highest since 1982.
This is actually disturbing.
Very disturbing.
For us. I think I'm sure the Fed is also keeping some of that, because we feel that the effect of that is that they might likely be more aggressive than we have actually anticipated. And the impact of this will actually be heavily felt by frontier and emerging markets, most especially. And if you look at it critically, Nigeria is not fully exempted. Although one advantage that we currently have is that we are not currently sitting on a lot of FPI's funds that compared to the past, considering that even in the last 2 years, we've been seeing aggressive outflow from our market due to FX instability.
Yeah.
So we feel that there will be impact on us, but it might not be as much as what the other economy would have actually encountered. And that's one of the reasons why the CBN governor was so much sure that we are operating in a different terrain compared to every other person, considering that our own current issues are more structural than monetary. And I think we will get to a time when the CBN will need to actually change their stance and be more aggressive to actually protect currency. At that particular point in time, we will likely see more of rate hike from MPs. For me, I'm looking at close to like 100 basis point rate hike from MPC for this year. It might not be at a goal, but I think we can see it in 2 MPC meetings because as much as we understand that the effect on us will be a bit minimal, but that does not remove the fact that we'll also be affected, considering that we're currently in the global market. And on the part of the government, simply means that because we're looking at the budget, the government will likely have to go to the market this year.
Yeah, about 50% of the funding.
The global market to raise one at a higher rate compared to what we did last year.
Yeah.
Because a lot of the investors will want to price those rates hike into the yield at which they are actually investing. And like I mentioned earlier on, that one thing is that Fed will raise the rate by 25 basis points, and investor will be looking at 100 basis points rate compensation from issuers in the market. So this, I think, in those fronts will actually be affected.
Yeah. So if I get you clearly, Mr. Oladipo, you're saying that the Central Bank of Nigeria this year would likely raise interest rates by 100 basis points projected. Is that what you're saying?
Yeah.
Okay.
Yeah.
Okay. And of course, like you rightly said, the inflation in America, 40 years hike in history since 1982, over 7%. It's expected that the Fed will start raising the interest rate. So outflows from the FPIs have been happening in Nigeria because of FX instability. So that means we still need to address the issue of FX. So that leads us to the point around the Central Bank of Nigeria monetary policy environment and how it's going to impact the fixed income market. You've already talked about the 100 basis points hike. What are developments you think from the monetary policy environment will shape the market? Because that, again, is very important, particularly the issue of the FX stability. Recently, the Central Bank of Nigeria last week also launched the RT $200 billion initiative, aggressively looking at having that foreign reserve of $200 billion, not depending only on crude oil, but other non-oil exports.
So for the Central Bank of Nigeria, we think for this year, they need to be more innovative. And I'm actually not surprised when I saw the TR200. And I feel that what that brought to my mind was what happened in 2017 when the CBN at the beginning of the year started the FX report.
Yeah.
In my mind, like, should we expect another thing from the CBN this year as well? Because it was the exact year that the IIM window was actually introduced and we saw stability in the FX market.
Yeah.
When I read through the document concerning the TR2, I feel it's laudable, and it seems that we are actually trying to de-emphasize revenue, FX revenue from oil sector. We are trying to deepen other areas from generating FX revenue.
Yeah.
And to my mind, that sounds one of the best things that we need to do. Over reliance on oil prices has actually led us to where we are today. And I think we have too much we have stayed too much on that front, and we need to move to another level. And we need to change the way we approach it, and that's exactly what I saw from what the CBN is trying to actually do in that front. So I think that the CBN will need to actually do more to actually find a way to create stability in the FX market. It's not so nice when you have multiple exchange rates that disturb the market and that can actually create room for rent. And the CBN needs to work on a way to actually harmonize the current rates in the market to actually find a way to actually create liquidity. One thing about FX is that you can only provide liquidity where at the fair value of currency. So the government should, the CBN should look at what's the fair value of Naira, where do you think that the forces of demand and supply is actually on Naira, and try and stay on that front to actually be able to bring liquidity to the market and be able to manage the currency appropriately. And like I said earlier, on that side, on the FX side also, we're also expecting a rate hike for this year for me, and I think that will also affect the market generally, most especially the fixed income market, because the market, what that means is that at a point in time this year, we'll see yield going north this year. So I believe that the CBN aside also using rate hike as a way to actually control inflationary pressure. And also FEI forms of the market as well. And the CBN will also need to use a more down-to-earth method as well, by actually being more aggressive with CRL, and also maybe actually the introduction of aggressive hormone issuances for the year, just a way to actually more liquidity to the system, and also to actually make rates attractive. Even currently, we saw 1 year actually close 5.2, and look at 1 year for our 5.2 and discount the including tax from it. Look at that tells you that the effective rate is around just 5%, and it gets to a level that rates are no more attractive to investors, and most of them will be recourse to actually buying dollars to actually for investment preservation rather than just investing treasuries waiting for when the rates are not attractive. So I don't think the CBN want us to go back to that route. We told that route before, and we actually know that it's not a very palatable one. So we feel that the CBN are also doing everything within their minds to ensure that they create a very attractive investment environment where people can actually invest and actually get an attractive return from their investment that will commensurate with their risk.
Yeah, thank you very much for that. Need for clarity, FX space, need for clarity in monetary policy, management of currency, and need for innovative approach from the monetary policy authorities to really attract investments to the fixed income market. In the next just 1 minute, can you share with us, Mr. Oladipo, how the investors should engage this year in the fixed income market? What are those things that you should look out for?
I think for investors going into the year, for me, the federal government bond will still remain the most attractive investment. And one of the reasons why I would say that is considering that they are tax-free, so you enjoy that additional privilege investing in that fund. So, but going into the year, actually people investing, we need to be a bit cautious investing in the first half of the year, first quarter of the year. And we have highlighted earlier on that there's a lifeline until the month of March where we feel that the dovish standard of the CBN and the monetary policy that will actually be made out. And at that point, they need to be a bit hawkish. And what that simply will mean is that we now will actually be able to off the site. And it means that at that point, you can start now coming to the market to actually take more of an informed long-term position around that. We know that the federal government will likely be coming to the international markets tomorrow.
Yeah.
So you also give an ample room to investors that actually want to invest in the federal government bonds. And For us, we think the federal government Euro bonds are actually very attractive for anybody that actually wants to invest in dollar-denominated instruments. And knowing fully well that the government is coming to the market, and also the DMO has been working with local issuers also to ensure that local investors are well taken care of in that form, to ensure that they can get their allotments for their interest in the market. So we also open doors to anybody that wants to invest in dollar-denominated instrument rather than just having in a dollar account.
Yeah. So of course the FGN bonds will be still the attractive one for any investor in the fixed income market, while we'll be monitoring activities around the FGN Euro bonds, because the federal government will be borrowing at least 50% of its borrowing out of its deficit of over 4 trillion, and this budget will come from the domestic market. So definitely investors will need to just watch out and see how they engage in that regard. Well, thank you very much for the rich insights, Mr. Oladipo Ajayi. Always very interesting and refreshing having this conversation with you on the fixed income market. Mr. Oladipo Ajayi is the head of the fixed income desk of Chapel Hill Denham, giving us interesting trends and developments and what will really shape the fixed income market in Nigeria for 2022, from the US Fed policy, the monetary policy of the Central Bank of Nigeria, down to the activities in the market and what investors should watch out for, commercial papers inclusive. It promises to be a very eventful year for the fixed income market space. So if you're an investor there, you have a lot to learn and get insight from. Thank you once again, Mr. Oladipo Ajayi, for the time.
You're welcome.
Thank you. And that'll be all for this edition of the Market Review. If you have questions, suggestions, or comments around the trends and developments that will shape the Nigerian fixed income market in 2022, please send your views or comments or suggestions to otobasi.abasekong@prochange.com, and we'll be glad to respond to you. Also follow our website, www.prochange.com. We have all the latest stories on the bonds and fixed income market captured for you. All the latest activities are there, from the bond space to the latest developments in commercial paper and other activities. They're all captured. Also, follow our social media platforms displayed on the screen. You also see all the latest updates from the market. Don't forget, at this period, you need to make wise and informed investment decisions. That's why you need to engage platforms like ProShare and very certified registered dealer members. Thank you for watching and have a lovely day.